Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over options data. And so this video is going to be an overview of all of these tickers. I'm just going to move Ed over so you can see the full list. These contracts I'm going to be going over, just doing a little bit of a breakdown. And so I just wanted to start by going over a few things before I do get into the data. And so this did begin by me just documenting an AMC options thesis that I have that I will go over. It is based on this call right here. And yeah, so that's kind of what started this. But actually, previously I had followed a contract with Tilray before their earnings. And that kind of started, thinking about options as a series, just kind of documenting it. Then following that, AMC option thesis here. And then I also have started to, accumulate this Neo call option that just I feel like seems really promising. And, from that, then I just kind of started to apply this to other tickers based on either my technical analysis or the technical analysis of others that I've seen on X or other platforms. And so I do try to include their info, so you guys should definitely check them out. And so all of this data that I'm looking at is from Unusual Whales. I was paying for the monthly subscription, but just due to financial reasons recently, I did drop that for the month of November. But, through doing this analysis here in Excel, compiling the data here, I've been finding that, it'd be much easier to just do this with Unusual Whales. But at the same time, I'm a hands-on learner. This is all about documenting my learning process, just trying to make the data more accessible, understand it better. I'm a hands-on learner. And so when I go to Unusual Whales, there's kind of like too much data. I feel like a deer in headlights there. And so this actually helps me to kind of, just filter out a lot of the noise, just look at some limited data from Unusual Whales to get a better understanding, see how that can help me make and inform on trades. But because of this, I'm thinking maybe I want to do an annual subscription. So maybe I'll pick up a Thanksgiving or, a Christmas discount if they do have one of those, as they do tend to have holiday discounts. So I will be adding Unusual Whales to the channel back at some point. But for November, I'm just going to be exploring it in Excel like this. And before I get into any of this stuff, just, none of this is financial advice. This is just documenting my experience learning how to manage options and trades better. And this is all for, taking profit short-term swings and trades. So I am not diamond handing any of these. I am not looking for a 10x. At most, I'm looking for, I think right now, a 5x for one of the AMC contracts, but for the most part, either 20 to 100% swings. That's what I'm looking for. And this is for educational purposes only, just for fun, what the channel is all about. Got to bring Ed back here so we do have some fun together. And I have to say that most, if not all, or some, of these trades will be bad. So, it's very risky. Options are very risky. But I am looking at contracts that are dated months into the future. So I do have plenty of times to adjust my position, get my average down, and or exit at not a big loss. And most of the positions here that I hold, they are pretty small. And so I feel like I kind of get made fun of, or I have an insecurity about that. But I keep them small just so I can be learning. This is like a level up from paper trading. And also, whatever I talk about in this, plans do change, whether that's something in the market, something in the country, or around the world. Things do change. And so if I say something about a level or a price target or a percentage, it's quite possible I might change that. And that might also just be that I'm at work that day and I don't want to be glued to the charts. So I just set a limit buy or sell, slightly different than what I talk about here. And all of these tickers that are over here, I'm just going to move Ed again for a second. There are timestamps to those tickers, so you can check them out on YouTube if you're watching this on X, but you can check out any of these tickers over there easily with timestamps. But anyways, I am going to dive into these options. And so the first one is this AMC call with $8 strike that expires January 17th. I'm also doing an $8 strike for June 20th of next year. And then also the $20 strike expiring in 2026. Last week's thumbnail, I accidentally had this as 25. But, and also to note that, I'm doing this all by myself. I make mistakes. I am human. So take it with a grain of salt. But before I do jump into that AMC one, cheers to you guys. It is Saturday for me, but I've been at work. I'm working this weekend, so it kind of sucks. But anyways, cheers to you guys. I'm excited to be putting this video together for you and just to be sharing my ideas. Hopefully it's helpful for you guys. So anyways, cheers. All right, and also just to note, I do stream on Sundays at 9 p.m. Eastern, ticker requests live, usually cheers then as well, so make sure you join if you do want to go over some charts with me and stuff. Always a fun time. But anyways, getting to the AMC calls, I've just got the tabs down below here. And so this is kind of how I organize the data. So I did update this from last week just to include a little bit more information. Hopefully it looks a little bit prettier. And so what I have up here, so this y-axis is relative to the contract. So that is either, the premium for the historical contract price or the position that I have. So some of these I have positions in, not all of them, but some of them I do. And then green is the underlying stock price, and that is on the right y-axis. And I tried to make the axes on the left go down to 0 because all of these positions could go down to 0. And I tried to make the right y-axis go up to the strike that I want to sell at. So, I can have kind of an idea of, the stock needs to go from down here up to here. Middle charts for all of them, I've got the volume in blue and the open interest in orange. And then over here, I have the implied volatility, or the IV, in blue and the total premium in orange. And so I'm just going to walk you through this with all of these stocks. So, I hope that this is helpful, and I'll also go over the data down below. And so all of this data that's in yellow here, this is publicly available on Unusual Whales for free right now. Anything below that I had previously compiled. And so they only give you 5 days worth of data. So that's partly why I'm compiling it here, but also just to have everything in one simple, easy to manage spreadsheet. So, I can just be learning as I go with this. And so anyways, what we see here, and the thing that actually, just to start off, what stands out to me about this contract, for me personally, this expiring in January, so just like a couple months away, that's a little soon. I don't really like that, but something that is encouraging for me about this position is that we see this big spike in volume over here in blue. And so that went up to, let's see, 5,666 contracts. That was on September 20th. Big spike in volume there. And then following that, there was a little bit of a sell-off. So open interest, there wasn't really a sell-off. Open interest only went up. It's just lower than that volume. That's because the axes. And so I should note volume is over here and open interest is over here. And following that spike, the open interest maintained at, right around 19,000 contracts being held up there, and that's only gone up as of close on Friday. The open interest was 19,800 contracts, so just about at 20,000. And so because that has been maintained, this person, or whoever, the people who made these big buys on the 20th, they have been holding, so they're not yet selling. And the thing that stands out to me about that being significant, which, you got to take the meme stocks with a grain of salt, they're very retail heavy stocks with a grain of salt, because it could just be, dumb money that is making a bad trade here. But if we do look over at the premium, which is in orange here, the total premium traded on that day, on the 20th, that was almost 200,000. It looks like $180,775. And so the way that you can think about that is one YOLO on Wall Street Bets is $10,000, or at least $10,000. And if you get up to more than 10 YOLOs, I feel like that is notable. It's not just, a small group of degens getting together, throwing some money at this. This is bigger money. or at least big money for me. Almost 200,000, that's a lot. And what we can see following that big spike in volume, or sorry, that big spike in premium is, that has been maintained. So that almost $200,000 is, staying in the contract here. So that makes me think that this is fairly promising. Although if we do look at the premium for this, it has been going down. And in orange, if you can see, my position is 19-cent average. So if we look over here, it looks like the contract, the average for Friday was 17 cents with a low of 16 and a high of 20. And so, it's been going down. My average is pretty close to that, 19 cents, but it could be lower. And I only do have, as far as I can see here, I only have 2 contracts. This one that I bought here and this one that I bought here. That's how I get my average at 19 cents there. And so what I plan to do, what I don't have it placed right now, but what I plan to do is place a limit buy order for the low from Friday, which was at 16 cents. And then from there, I'll add one more contract, get my average down, and I expect it to pop. But because this is expiring in just a couple months, it's a little too close for comfort for me. I am not going to wait for a 100% swing. I will first trim out at around 20%, and then the remainder of that, which right now is, like one contract, I would trim out at 60%. And the reason for that, I believe, is because, I think there was a reason that was related to like 32 cents. I forget. I think there was a spike in the premium or something. I forget why I picked 32 cents, to be honest. I think, let's see, the highs over here. I thought it was something like there was a spike, but yeah, I guess not. I'm sorry. I'm drawing a blank on it, why I was thinking 32 cents. But let's see, on this day, what was this day over here? Let's see if I can get this lined up. That spike, it's just showing plot area, but that looks like it was 1, 2, 3 days ago. We could see, the spike around 25 cents. I thought there was something around 32 cents. And so, anyways, I forget what that reason is. But, maybe it has to do with this spike here. So this was on, I don't know why it's not showing me the date. Okay, so that's the 20th. So if I look over at the premium on the 20th, I believe that's it. So let's see, the 20th was over here. Yeah, so September 20th, right there, the average was 32 cents. And so that was the day where there was this big spike. And so since premium has come down, I want to get out at around 32 cents because this big, presumably it was a big order or series of big orders. I haven't looked into it close enough. But since this was all concentrated onto one day, I assume it's like, one big player. So I feel like that is a good target, at their break even, I could be getting out of my position, take some profit up to about 60%. And so my limit sell, I believe for that would be 30 cents. But you could just do the math on this, 19 times 1.6. That should be, I believe, 30 cents. I think that's my exit. And also, I forgot to mention this at the beginning, but kind of my thesis with AMC, I might actually go over to Webull to show this. So this is that contract, past couple days, got a big move up, but then a pullback. So, I could have taken profits on these spikes. Oh, and this is actually the June contract. Sorry, not the January contract. So that's this one, but still, it's been coming down. But anyways, what I want to show you guys is the AMC chart. And my thesis with AMC is basically that there's this gap down around $3 and there's this gap up around $7. I think price could fade towards $3, not fill this gap, and then anybody who was waiting for this gap to be filled, the price would kind of launch And then, getting up to this gap, those people who are waiting down here would see, oh, well, this gap's filled now. I don't want to get left behind. And then they roll into it with some FOMO. And so, my thesis is basically that AMC could be going up to like around $8 a share, which would be right around here by June. And so the contract that I was just going over, this is, of course, that expiration January 17th. But, this is not the one that really I started to think about, doing these kind of options videos. That contract was this one, which expires June 20th of 2025. I have been adding to this one going back, a few weeks. It looks like going back to October 15th. And so this one actually doesn't have as like clean of data suggesting that, got this big spike and then open interest is held up there. With this one, you do have open interest that is elevated. I really just don't go back in time far enough to have this spike up. But what we can see for this contract, the open interest, for these spikes over here, that's like less than 18, or this one, I guess, is 18,000. Oh, I guess just less than 18,000. And so it's not like a big whopping order like what we see for the January 17th one. That to me is, like an unusual whale. Whereas this is just, maybe it's just some degens, maybe it's just some people YOLOing into this, but also I think it's really just that this is not really that popular of a contract because it's, like 8 months out and, so it's just not sexy. It's not exciting. But, I don't really want to be adding into a position when something's exciting. I want to be doing it when it's boring. And so I have been adding when it's been effectively flat here. And you might notice there is this little bit of a drop. Let's see if I can get that. Data point there came down to 32 cents. That was on October 24th, but I actually had a limit buy, I think at either 48 or 49 cents, but that wasn't filled. So, I'm kind of confused about that 32 cent point, but that is, the real data, which the low we can see in this column, we do have that 32 cents right there. So that is, well, I guess, this plot is based on this data here. So, maybe I fudged that number, but I didn't. I copied this very carefully from Unusual Whales, but, of course, I could be making a mistake, but I know I definitely did not make a mistake with that one. But anyways, so this one, the data up here doesn't really tell me too much about, what's going on regarding, am I bullish with this? This one, definitely. I think that looks good. But at the same time, people can lose out on hundreds of thousands of dollars. Definitely happens. But, just for this one, looking at the data, I just see that the premium has been coming down, but then it's kind of flattened. And you can also see that the stock price here has come down, kind of flattened. And more or less has, but it has also rolled over recently. AMC did just have earnings, and so they were in this uptrend, was looking really good, but then following earnings, it has pulled back a little bit. I had found, just getting into a little bit of the TA, I meant to do an AMC video last night, but I didn't have time for it because I was preparing for this one. But what we can see here is this level, $4.24. I had talked about that a couple weeks ago. We pulled back to it, not a big deal. And, also we have to consider that over the past, let's see, going back to October 10th, AMC, had been up almost 20%. And so now it's pulled back. It's still up over 5% in the past month. So, it's still been a green, 29 days, 21 trading days. So we gotta, keep our chins up. It could be worse. And, it did pull back to that level, $4.24 that I previously talked about. Also, $4.20 is a fun level to buy. And we did dip to it on Friday, hitting a low of $4.17. And then one other thing that I can do, which I commonly do, but there's just a lot of clutter here, is can do a Fibonacci retracement going from that low to that high, and the 786 is right around 420. So, I feel like this is a healthy pullback following, this straight uptrend that AMC has been in. So I'm hoping that this can bounce and stuff. So I'm really not too concerned about it. But with that being said, with that pullback, it is nice to be like picking up some shares at a discount. I believe last week I had talked about, or maybe it was, I forget when I did it, maybe when I initially went over this contract, I had talked about picking up a contract at 60 cents. That got filled, but that was because it was going up. I didn't really want to be getting left behind. I just picked up one, so it's not a big deal. But I didn't remove my buy order at 52 cents, and so that got filled on Thursday the 7th. And on that day, let's see, we can see that the low is actually 44 cents, so I could have gotten a better deal. But the high on that day was 95 cents. So, it's not that bad. And I have been getting my average down. Well, it was 52 cents here. That's kind of why I had 52 cents order placed, just because I wanted to add, even if I'm not getting my average down. But, so I did spike it up a little bit to 54 cents. And now it's at 53. And so my plan with this, for this contract, because this is kind of like the mother of this options thesis thing. My thesis for this is to be selling at 100% increments as far as profit goes. So I do have limit orders placed, so going up to 500% because I do have 5 contracts right now, as far as I believe. But it's possible I'm mistaken. I'm pretty sure I just have 5 though. And actually, we can check that. If I go over to Webull, I go to the June contract here, and we can see these are like the sell orders that I have placed already. My average is, 53 cents, so 100% swing would be 106, and then another 100% from that, so adding 53 cents to it, that will put me at 159, then 212, then 265, and then 315. And price has been up there the last time. The stock price ran up to around almost $12 a share. And, I think that price could be going in such a volatile way in the future. So, I feel comfortable with these limit orders placed, but if price does spike up and maybe this one gets filled, and then it kind of tapers out, maybe I just take it off the table to take the risk off the table, because the goal with this is to be making money on these, not just to be holding them. They do have expirations, and I do need to respect those. And and so my next buy for this, I don't have it placed, and so the reason for that is I just got paid on Friday, so I gotta just move some funds around. But the low from Friday was 48 cents, so I have a limit buy, or I want to place a limit buy at 48 cents, and so I'll be doing that before the market opens on Monday. And so that's kind of my thesis with this one. But, like I said, of course, that could change. And because the premium price has been lower than that, 44 cents, if I'm not including this 32 cents. So, that is just so I can continue to kind of dollar cost average, build this position slowly over time, as I do have plenty of time before June 20th. But yeah, that's kind of the overview for this one. So now I will move on to AMC at, the $20 strike, and this one is expiring January 16th of 2026. So I got more than a year for this. And one thing you might notice is the y-axis over here goes from, right around current price up to $20 a share, because that is, where price needs to be going. And I don't necessarily think it needs to be sustained at $20 a share, but if price does get, some violent moves up to there, I would, be interested to take some profits. And so right now I do just have one contract at 35 cents. And as you can see up here, I don't have any plans to sell this. I kind of wait for my other AMC contracts to be fulfilled, and then once I've sold those, then I'd probably be like, okay, I should probably sell this one, or maybe I just want to hold it because it is so far out into the future. Just a $20 strike, I think that makes it a little bit risky. If this was $8, I'd feel a little bit more comfortable with it. But yeah, let's see. With this, we do have a big spike in the volume here, and the open interest goes up. It does pull back a little bit, so there was some selling off. Then it goes back up, and then selling off. So, it's still elevated, and it does look like, the premium from that was around 800,000, that spike. So, that's nearly $1 million just on that one day, this little spike over here. And so, that's a lot of money. That's a lot of people YOLOing, a lot of degens on Wall Street bets. And so, that gives me some confidence in this one. It's just, not a sexy contract because it's, more than a year away. But with that being said, if we do look, the premium has just been coming down in this time frame, but it's only, 35 cents a contract. I'm happy to be picking up one of those. And so my plan for this, as of the start on Monday, is to place a limit buy for one more contract at 30 cents. See what happens, reevaluate. Maybe that doesn't get filled. If it doesn't get filled, that's fine. It means that price is going up and I'm making money. If it does get filled, that's great. I pick up more and I casually just add to it. So, I feel good about this one. And the real reason why I'm looking at this is because it popped up when I did a search on unusual whales, because, I have kind of like limited resources since I'm not a paying subscriber right now. And so this one popped up and it's like, oh, well, because you get kind of like a list of the most popular ones. And it's like, oh, well, I'll just look into this one as well because it's far out into the future. Might as well have fun with it. It's only 35 cents for contract. So, no big deal. And I should note 35 cents translates to $35 because it's 100 shares. But yeah, I don't think I have too much to say about this one. But, I do think that for AMC, the one that really makes me feel good about it is this one that is expiring this January on the 17th. So, hopefully I can, make 20 to 60% on this. Only risking right now, so 19 times 2, so that is, let's see, $38. So, not a big deal, not a lot of money. So I can manage that risk, no big deal. And also manage those emotions. I'm not getting emotional about it. But yeah, so let's see. I'm just going to skip over to this last AMC cheers before I move on to the next one. And so hopefully I'll be done with this long list of tickers before I finish that beverage. Okay, so the next one is Celsius, ticker symbol CELH. This is a $50 strike call that expires March 21st. The reason why this is not going out to June is because I couldn't find the contract going out to June in unusual whales to get the data, just because it's not that popular. And so I actually think this is kind of like a nice way to refine my interest in these contracts, because just like this AMC one that expires in June 20th, it's not really that popular. Whereas the one expiring either January 2025 or 2026, it's a little more popular. And so this Celsius one just gives me a little bit more, there's a little bit more activity. So I think it's a little bit more interesting to look at. But I did just add this to the list, I believe, over the past week, starting, I guess, on Thursday of a couple weeks ago. And that's why you have these two down here. And sorry, I guess Ed's blocking some of the data there, but he keeps me company. I like to have him here. And yeah, so looking at this data, and I guess I should go over, kind of like what's my thesis with this. And my thesis really comes from, man, I've got this frozen up here. Maybe I should think about formatting this differently, but it really just comes from this tweet from Mr. Chart Norris. I recommend following him. He does a lot of great TA, and yeah, I just appreciate the posts that he puts up. And so it's just like this simple chart, Celsius, and that, there's this potential inverse head and shoulders pattern. And so, with it going up to $50 a share, let's see, I believe I probably have that on the chart, or if not, I will throw it up there, why I think it could be going to $50 a share. So just going to pull up the, let's see, this is, oh yeah, this is not the contract. This is just the stock price. So 50%, or sorry, $50 going right up to here. I got 49.30 mark. This is the daily chart. If I do take, scroll back in time, maybe I want to put this on the weekly actually. What we can see, I've got all these levels. Actually, I can just zoom in like this. I got these levels to the upside. We're down here. I'm hoping we're forming kind of a double bottom here, inverse head and shoulders pattern. And, just kind of seeing, how the analysis of Mr. Chart Norris plays out, but also Gareth Soloway, who I post a lot on the channel. He also kind of identified this falling wedge. And so I had wanted to get into a position, I believe, based on the close here, but I didn't. Because it gapped up, and so that didn't fill, and I missed out on this, but now it's pulled back some. And so, I was thinking, well, rather than getting into shares, maybe, I could get into some options. I don't have a position in this one at all, but I just think it's interesting to follow, to just kind of like learn what's happening with it. And so, the reason why I picked 50 is because we got this consolidation over here that did serve as the base over here before the stock price did launch up. And so I could see that acting as some resistance, getting up to that level, but I also have about $40 marked, corresponding with the tops over here. Had been prior resistance, could be resistance again. But then there's also, this level here, right around $36, corresponding with the low over here, close to the tops over here. So I could see that acting as resistance as well. But, just because I have a $50 strike for the contract I'm looking at doesn't mean that price has to go up to $50 a share. It just has to move up towards that direction for the premium of those contracts to go up. And so, if I do switch over to the daily again, that's where price would be going. And so, like, if I look at, the stock price from where it's currently at to going up to $50 a share, that's, like a 70% move. But if I was to pick up, let's say, one of these contracts at, let's see, I need to scroll back over. I got his DD there pointing at that falling wedge. But yeah, if I just come back to here, we can see that the premium is right around like 80 cents. So with that being said, 80 cents could go up to like here, just what the premium was. Let's see, on November 4th, it was 170. So going from 80 to 170, that's more than 100% swing versus the stock. That would be like a 70% swing, I think I said. So, it's just easier to get a little bit more on this just percentage wise, and you don't even have to risk that much money. It could just be like $80 one contract. But I, like I said, don't have a contract in this. And there's also just like really limited data just because I don't have access to it. And this is like, again, an example of why I think it would be really valuable for me to get unusual whales again, but I am just trying to kind of refine it, to just be going over it in these spreadsheets. And so what you can see in the graphs up here is just, the premiums kind of following the stock price. The stock price does look like it did drop a good amount on, so it just looks like it kind of, tested this level, broke below, kind of got rejected. And that uptrend is based on, the lows that I have drawn over here, going back to the low from earnings day, November 9th of 2022. And then this other pivot point being the low from March 13th. And so from that, that's how you kind of get this support. And so it's not just like a double bottom, but it's also like that level. I know we're below it now, but I like basically the thesis is that's a fake out and that price could be going higher. But if it does go lower, that's fine because, I'm not holding and not really planning on buying any contracts. But if this does do something that's appealing, I've got some of the data compiled here so I can just kind of look at that. Maybe if this drops to like 70 cents, maybe I'd look at that. But that would be, of course, after the day is trading close and I add it to the table here. And then what we can see in the volume and open interest over here, spike in the volume and the open interest does hold up there. And that premium was about $160,000 on that spike. So that is more than 10 degens YOLOing. So that does make me feel good, but it's also not like getting into millions of dollars. And so that would be like really nice. But I still think that this looks potentially very nice, but I am just not participating in it. And I should note that I forgot to mention at the beginning of the video, my plan for my trading portfolio is to have a position of no more than 20 positions. And so like I have 20 positions right now that I plan on cycling in and out of. And so I would only pick this one up if it did drop and I had gotten out of a different position to kind of swap in and out of things. Or, if I yeah, basically that's kind of it. But I don't always do that. But yeah, so nothing over here because I don't have a position, so I don't have a plan to close the position. But before I, as usual, go over to the next one, I will just have another sip. So cheers again. All right. And so the next one is FSLY. This is one that I did trade following last week's video. I had a position. I bought one contract at 89 cents. As you can see up here, bought it, it looks like on, I guess the date's not popping up, but I can just see it here, October 29th. And so I held that for a little while. But as you can see, the data here is just really spotty. June 20th, $10 FSLY call. So it's just, not a very popular expiration just because it's, more than 2 quarters away. So not too much data, not too exciting, but I picked up a contract and I sold it at $1.25. The high on that day on November 6th was $1.29, so I sold it pretty close to the top, took a 40% profit, which is only about $36, so nothing too crazy. But, this one, I'm out of it. I don't plan on getting back in. Well, actually, I might consider getting back in, and I'll go over that in just a minute. But here, looking at this was a pretty, this I think is a nice example of not being greedy, because if we look at, the highs here for the asks, since I bought that contract at 89 cents, the highest price was $1.29. I sold it $1.25, so I got pretty close to the top there, and prices since pulled back to the high on Friday was 85 cents, so below my average. So I did a really good job of not being greedy, getting out for not a large dollar profit, but this is like level 2 paper trading basically. And, 40% swing over the course of less than 2 weeks. That's pretty good. And so if I get more practice doing this, I can start making some more than, can multiply this number by 10 or something, and then 10 later. So, I feel really good about this one. And so the thesis on this, which I will update the chart, with the updated chart, but it was just based on this cup and handle. I drew this during a live stream, Ticker Request Live, so definitely recommend that you guys check those out. And so I will follow up on that because it did break out from that handle, but it did something interesting after it broke out, which makes me feel very proud that I was not greedy. And so what we can see in the data, though, is that, there was a spike in open interest with a spike in volume, and that open interest has held up, but it's only about, $5,000. So it's not like, that's half a YOLO. It's nothing too crazy. But, because the premium, let's see, where's the premium that was like, it's back at 85 cents, or whatever it was. I have 85 cents marked here. Or it should be marked there. This number should be, it says 89 cents, but I think that's the wrong. I don't know what date's popping up there. I'm not 85 cents. There you go. And so it's lower than the average that I got here. So, maybe I want to get back in. And so if we do flip over to the chart for FSLY, we can see that beautiful cup and handle that I drew. We got a breakout. Got a confirmation of that breakout. So that, I'm not the best at, breakouts, confirmations, whatnot. But so clearly, this is the handle of that cup. Got a very clear breakout with this big candle going up over 8% on the day. So that's November 5th. And then gap up and closed up here. Closed above this breakout level. And so that, as far as I understand it, is confirmation. So if this does come back and retest this downtrend, it's unlikely, or it's less likely to break down because there has been this big move, multiple closes above that level. It suggests that it's likely not going lower. So maybe this is one that I want to buy back in, but I just haven't done that yet. And I don't necessarily plan to. It's something I'd think about. And so one thing we can do with this, cup and handle is just do this measurement that I have here, just going up from the base of that cup to the brim of that cup, or where that handle meets it. That's the halfway point, and then going up, from that bottom, that would be bringing price to around $10 a share. And so that is why I have the strike for $10 a share going to June. And so, I think this is like, great. I made 36 bucks on this. I should buy back. I don't have an order placed on this, but maybe I want to place one. And so the way that I've been kind of documenting this on here, and this is just a note for myself. I may do this, I may not. I'm actually going to do 70 cents because I think 70 cents might be getting greedy. I'll do 75 cents. I'm going to put a box around that so I know that is a level that, or a premium level that, I think it might be worth it. And I'd be risking $75, but I had made 36. So, I'm basically risking only like $34 there or whatever, $39. Is that right? I don't know. Mental math is not my strong suit. But anyways, yeah, I mean, I'm really proud of this trade. I do feel good about it. And I think that there's still more potential with it because I think this is, part of the process of, it breaks out, people jump in up here, and then it pulls back. Those people doubt themselves. They're idiots. Or they think they're idiots, not saying they're idiots, just that they feel like that. And then they cut their losses, and then it takes off. So it's really just a psychological game. And I just view this as, a very nice breakout, retest, and then launch up to $10 a share here. Or, we got this gap up here right around 13. So I think going up to 10 over the course of the next 8 months, that seems pretty reasonable to me. And it could also just be for a nice another 40% swing. I'd be down with that. But I'd rather get back in lower than 89, lower than 85, 75 cents, which is $75. Sounds good to me. And so, with that being said, you know what that means. Cheers, you guys. I hope you guys are enjoying the whole video, watching the whole thing, not just skipping from timestamp to timestamp. But if you are, that's fine too. If you're watching the whole thing, cheers to you. I hope you grab yourself a beverage so we can cheers together. But anyways, on to the next one, which is FUBO. So this is one that I am holding. I just have, let's see, I've got 3 contracts, it looks like. My average is at 30 cents. And it closed on, let's see, on Friday. Well, it closed, I shouldn't say that. The average for Friday on the 8th was 22 cents. So, I'm down on this one. And I think this is one that didn't necessarily happen the way that I expected to. This is also based on some of Chart Norris's analysis. And so he was saying that, the $1.50 price for the shares would be a gift. And then I did some analysis kind of, mirroring what he was doing. So I owe a lot of credit to him on this. You can see the price up there, $1.52. And yeah, so I think that the thesis is basically the same, but since then, price has gone lower. So I'll just pull it up over here. Look at the chart. It's at $1.42. But, this could just be like a double bottom. And so, I'm not sweating it too much. I only have 3 contracts, $30. I'm risking $90. Not sweating it too much. And I think, even if price just goes up to here, 186, these contracts are for a $2 strike call expiring May 16th. So plenty of time. So I just need some volatility to the upside. And with it currently at right around 20 cents, I do have a buy order, or I will have a buy order placed. I don't have any orders placed right now for anything in this video. But I do plan to, prior to market open on Monday, place a buy order at 20 cents, get my average down, and thinking that this is just like discounted premium here at 20 cents as price is trading right around $1.42, which it closed at on Friday. And let's see. And so my plan for this one, since things didn't really go according to plan, my initial buy was 35 cents. Maybe I'll turn that into 70 cents. It's kind of my thesis. I've just been getting my average down. And so because that didn't really go the way I was hoping to right away, I will just, exit my position at 20%. I feel like it could probably go a lot higher. But my thesis with all of these is that I want to be in and out. I want to be taking profits. And if I can make 20% over the course of the month and rinse and repeat over multiple months, I'd be looking pretty good. Even if it's, small positions like this, I get more comfortable with this. I up the contracts that I hold and I start to make more money. So, just level up paper trading. But anyways, let's see. I guess did I flip over to the chart here? Yeah, I did. So we see that. And so this, the premium is following the underlying pretty much. My average right there for my position, right around 30 cents now. And what we can see is open interest is going up, so that's good. Premium, there have been spikes up to about $20,000 to $20,000. So that's good, but it's really nothing too crazy because it's just a couple of YOLOs. Nothing too crazy, but it is a sub $2 stock, so I wouldn't necessarily expect a lot of money to be on this. I don't think the whales are going to be trading this. I think it's probably going to be more retail dominated. And so that's also another reason why I think it's probably good to be trimming out at 20%. Or by trimming out, I mean closing my position, not holding one contract or anything, just getting out at 20%. So, from 30 cents, that would be going up to 36 cents. That's not like a huge difference. But yeah, that's kind of my thesis with this one. Not terribly exciting. The next one I think is probably going to be a little bit more exciting, which is one I don't plan on participating in as far as contracts go, but I do hold shares. And one of the viewers, I believe of the channel who I do exchange with on X frequently, is pretty bullish on GameStop, so I'm excited about that. And so I'll just get into that now, and I'll probably add some of his DD onto this. But yeah, so this is a GameStop $25 call expiring this coming Friday, so November 15th. And so this was posted on X by the Bronx Viking. This is not the person who I'm talking about who I was exchanging with. But yeah, Bronx Viking, I think he does a lot of really cool stuff. He's posted some stuff like Unity software, other things. And, I really just learn a lot from his examples and using unusual whales, stuff like that. And so he's basically saying, this is not a drill, everyone. I repeat, this is not a drill. My custom GameStop Roaring Kitty filter on unusual whales just got triggered. 5,000 block order of GameStop, $25 calls for, this Friday. So that's what I'm looking at. There's some, information in that screenshot that I have there. But I also wanted to pull up some other DD from this other person that I do exchange with, or, this person that I exchange with on Twitter. So let's see. I will just search him, I guess. And let's see. Who am I looking for? Volatility. I recommend following him. I think he does a lot of great DD. And so I'm just going to scroll. I think I liked what I was talking about. Rivian, I'll come back to that a little bit later in the video. Oh, wow. So he's talking about, AMC coming down. Yeah, so there could be some discounts on that before it breaks out. So anyways, I'm just going to like that because he's a very honest guy as far as his opinions about stuff goes, and he's not too bullish on AMC. Whereas with GameStop, this is one that I liked, as you can see there, why I think it's going to 30 and then 50 to 53 weekly. And so let's click on this so we can see. So symmetric triangle broke out, and so I'll click on the pictures in a second. MACD flipped to bullish. RSI broke out a falling wedge. 50 to 53 macro downtrend roof after 30 is crossed. I am in and been adding. And so this is one that, I have shares. I've also been adding shares. I'm also, though, not too aggressive with it, and I don't plan on buying this contract because it's a little too soon. I was curious to look at other contracts, but, I am just not going to do it. But anyways, this is some of his analysis where we can see, let's see. I'm not going to begin to try and interpret this, but, breaking above 30 and then getting up to around 50 there. So break to 30, kind of pull back. This looks like a little bit of a head and shoulders pattern going on, but going up to around 50 there, pulling back, and then so nice dip buys over there. So anyways, in the immediate term, it does look like it could be heading up to $30. And, I wish he had just posted one screenshot, but I know what his analysis looks like. So I'll just, frustrated. Let's see. How do I want to do this? I'm just going to take a screenshot like this, and then I will add this to my little, actually, wait a second. I'm going to go like this because then I can include that I liked it. I acknowledge that. So I'm just going to do this and take a little screenshot there so I can add that to my spreadsheet and just add it to my little like DDD, not DD, but my DD space down there. And I'm just going to adjust the width of that to 5 inches. I think that's what I normally do for those. I don't know. I'm kind of like learning the format of doing this. And I'm also, in case I do want to go back to this and refer to it easily, I'm just going to copy the link, post that there, and I'm just going to adjust this to match destination formatting. And then, oh man, I want to make sure that's a hyperlink. Okay, cool. There you go. And so, yeah, for GameStop, the Bronx Viking and Volatility posted about this. And since, let's see, when did the Bronx Viking post that? So I'm just going to click on that link so we can see his post. That was from November 5th. And so let's look at the data over here. When was November 5th? November 5th was up here. The premium was around 79 cents, and the average on Friday was 106, so it's definitely gone up, so I think that's great. So this was a nice little alert, especially if it does continue into next week, and I feel like it could be closing next week above $25, so I do feel like this will be a good one. So yeah, anyways, I just kind of wanted to track this to see, because I don't always participate in what people post. Most things I don't, but I just kind of wanted to see how the data plays out. And so, this date was, his tweet was on this day. So maybe I want to just put a little box around there so I know that's when he posted about it. And the high for that day was 99 cents. I guess the low that seems a little crazy for Friday, but the average for Friday was 106. That's still, 7 cents above, so that's good. And yeah, what we can see from this, thinking about the premium on, November 5th would have been right here. Yeah, this y-axis over here, that's the millions of dollars there. So yeah, and on Friday it was up to $4 million. So yeah, this is just, this one's going to be pretty crazy to just plot up here in my very limited way of doing this. But yeah, for me personally, I am holding GameStop shares. I'm excited for it to go up, but I'm also just chilling. And so, what Volatility is saying, 30s and then 50 to 53. So yeah, I'm stoked for GameStop share price to go up to 50. Yeah, I'll just be kind of observing the options and just kind of learning from the notifications and whatnot like that. So yeah, I think that's a pretty cool one. And we can also see, maybe I should pull up the chart. And so GameStop, because I don't have any contracts, this is one, yeah, looking pretty good here. Did break out from this downtrend above Roaring Kitty's average, which is this dashed line at 23.41. That's my dip buy level if it does pull back, because why not? Above 24.69, which was the high over here. And yeah, so I think it just might be tough to get above this uptrend. And it looks like this is probably around $30 there, that pivot high. The pivot high was actually at, let's see, 29.79, and then beyond, you're getting up to 50. That would be corresponding with this gap fill. So yeah, this could be, making some very big moves, and so I'm just excited about that, and I'm excited to be learning more about the options as that does happen. But, with that being said, cheers to you guys, cheers to retail. I am going to be switching on to the next one, which is Hycroft Mining, and this is a $3 strike call expiring May 16th. And what we can see here is I do have a position in it. That position value has just been going down. My first contract was purchased at 75 cents, but I have since gotten my average down to 59 cents most recently, having bought one contract at 45 cents. But, the low on Friday was 30 cents, and that is actually the buy that I plan to, place prior to start trading on Monday. And so for this one, I have 20% that I would be basically just be selling, like all of my contracts except for one, and then I'd sell that one at 100%. But, this is one that I'd probably change if I got two numbers up there. And let's see. Yeah, I guess my DD for this is my own analysis. I've been following a lot, but really just like there's this purple uptrend. I see like this inverse head and shoulders pattern. Did pull back to this trend line here. And I think that we did break below and actually get to this gap fill. And so I'll actually pull that chart up over here. So this is for the contract. It does look like there's a pretty big move to the downside, but then it bounced. I suspect we'll see something similar in the stock price. Actually, not really, but we did fill that gap as I had mentioned. And so this just looks like, not so great. Eventually it's got to turn around. If we look at the RSI, or sorry, the MACD, that was negative 0.03 here, negative 0.04, almost 5. So getting pretty low, but this could be, a spinning top suggesting a reversal. Wick to the downside, wick to the upside suggests indecision. But with that gap being filled, maybe it's time for this to start going up. But maybe, I didn't call this one that well, and this does continue going down. But, I don't have a huge position. It looks like 1, 2, 3, 4, 5 contracts. So I'm risking about $250, more than that at 59 cents. So maybe this ends up being a bad decision, but I do have until May 16th. And so kind of like getting into the data around this one, we can see that, the stock price and the the underlying stock price and the average of this premium have been, following the same kind of trend. We can see these spikes in the volume, which represents premium going up to over $3,500. So, not even a YOLO. So this is a pretty small time. But we can see that open interest going up. So I think that's a good sign, but I also think this is pretty speculative. So this might be one of the ones that, I might lose some money on. Yeah, I feel like it's just like the kind of thing with patience. And so that's why I'm only buying, one contract at a time, because I don't want to throw in a bunch of money at 75 cents and then later find out, man, I'm down more than 50%. No problem. Time's on my side with contracts that are dated months and months in advance to expire. And so I'm cool with this. I think it's fine. I'd add at 30 cents and then, just kind of reevaluate and continue to kind of monitor this data. But yeah, that's pretty much it for this one. So the next one, I feel like it's kind of a gamble. It's a little too speculative. I am maybe going to regret this one, but it's a very small position right now, just risking $40.40 on a Lucid $3 strike call that expires June 20th. So, like 8 months from now. And so that is really just based on, if I scroll over to the chart here, I was just thinking that, it's like putting in new lows, but it looks like it's just kind of like maybe fake out below these levels earnings. Maybe it starts to turn around earnings. And there's also this gap up here, that blue dashed line at around $3. And so that's why I have that $3 strike for this call. So, that just makes sense to me. And, this is June 20th. Yeah. So, I got like 8 months until then, more than 8 months. So I feel like it's kind of a safe bet. If I do flip over to the chart over here, we can see this is for that contract. If I flip over to the chart for the stock, it did bounce a little bit. It looks like it might have found a bottom right around earnings. There are some big wicks to the downside, closing around the midpoint of the trading. So, maybe that's a little bit concerning. Also being a red candle, so coming down on those days. But, this could all just be, fake out stuff, and that, Yeah, it could be the bottom. And I might actually, this is probably not going to be lined up because I would have had it otherwise drawn up here, but just draw on these, you know, lows. Now, I mean, price could be coming lower than it is, but and potentially finding support with that level, but it doesn't look to be that significant. So yeah, I mean, this going up to $3 a share 8 months from now, I feel like that's pretty reasonable. So let's see what my plan is with this. It is to buy another contract at 35 cents, which has not really been hit. The lowest we got to is 36 cents, but I'm also fine if this one does not get filled. And, you know, considering that, you know, this is a kind of a speculative EV stock, you know, yada, 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 I am not going to be risking this to 100%. I just have what looks like a limit sell at 20%. So going from 40 to 48, and that's not to say that I don't think that this one could be, you know, a 2x or 100% swing. It's just that, you know, I want to be in and out of these positions, taking profits, not getting emotionally attached to them, not being dragged down with them, kind of, you know, like what I avoided with FSLY, taking the profits, waiting for, you know, a dip, and then maybe potentially to be buying back in. And so, you know, that's what I want to be doing. I want to be swinging. I don't want to be falling in love. And so with that being said, we can see that the premiums come down, kind of flattened out a little bit, it looks like here, right around when I started to buy in at 40 cents. The underlying stocks also kind of flattened out, and we do see this spike in volume here, which does correspond with the spike in premium, which is around $40,000. It's about 4 YOLOs, so nothing to be going on about, but this is also like a less than $3 stock. So, you know, also with the open interest going up, I do think that's a good sign. And so, you know, I am thinking that, you know, I'll be buying another contract, start Monday if it does dip to 35 cents, and if it doesn't, that's fine. And I'll move on to the next one, taking 20% profit, and that would be trading over the course of like less than a week. So 20% profit over the course of the last week, way better than a savings account, way better than a lot of stuff. It's only $40 to $48, but you know, as you can see, I got a lot of options going on around here, and so those numbers will stack up, they will add up, and I'm not emotional because it's just 40 bucks, you know, I don't really care. And I'd be happy to add $35 to it. So yeah, so I hope that's useful. I find it to be useful. But cheers to you guys. And so the next one, this is one that I probably don't plan on participating in. I did swing just a couple shares of Marathon Digital. And I was thinking, oh, maybe rather than doing shares, you know, just being kind of in and out, maybe I could get a contract. And so part of this is also, so I'm going to go over kind of like my DD for this. A lot of that comes from, you know, just seeing posts from Volatility. So I'm just going to go over to Twitter and go over to his profile. He was posting, let's see, I just got to scroll to it to find what he's posting about Marathon Digital. And so with week ending, TA on weekly chart needs to be reviewed. Massive cup and handle with falling wedge in making. RSI broke out, a falling wedge. MACD flip bullish. Bullish engulfing weekly candle. $23 break, and this is moving hard. Also, Bitcoin's going up over the weekend, you know, crypto, all of that. And so I feel like, you know, probably, you know, left behind. That's totally fine, you know, because I'm just trying to get better at being in and out of trades. But yeah, just going over some of his analysis here. Got this nice cup handle here. It looks very similar to that FSLY chart in that sense. And, you know, just kind of trading in here. And that, let's see. I'm not sure when that, what date that was. I think that was probably from Friday. But yeah, I'm just going to take a screenshot of this, and I'm also going to include in that screenshot that I liked it. And so, dang it, I didn't want to do that. I took a bad screenshot. Let's see, I need to delete that. Okay, and so I'm just going to do another screenshot attempt. Man, what the hell? I don't know if it's my mouse or something. Maybe I need to update my computer, but it's been having a tough time with screenshots lately. And so there I've got his DD, and I've got it copied to the clipboard. And so I am just going to paste that right here, and I'm going to adjust the width of that to be 5 inches. And copy a link to his post just so I have it in my handy dandy little spreadsheet. Make sure that's the correct format. And I'm just going to then hit return. So it's a hyperlink there. Excuse me. So I can just click on that. And then also, I mean, I had done some analysis on this, I think really just inspired by volatility. So I thought I'd pull that up. And yeah, I mean, I think it's pretty similar to what he is doing. I kind of viewed this as like inverse head and shoulders, and from that, you get this measurement with the halfway point going straight up from the base of the head or the base of that cup up to the neckline or the brim. And from that measurement, you get a move up to around $25. And so that's probably the strike that I have picked out for this call. Let's see. $35. This is March 21st. This is when I just, started looking at recently. So it's probably just that there wasn't much going on with a $25 strike that's so far out, 5 months out. But I'd just rather work with something like that. But what I could see is this actually gapping up and breaking above this level, but maybe it pulls back, kind of like that FSLY chart, retest this, and then continues on. And so I could definitely see that, and I might actually note that in my, let's see, drawing here. So let's see, where do I go over to here, drawing tool. And so I'm kind of viewing that this gaps up, and that maybe this comes down, goes like that, and then it goes up. And so that's kind of the thesis that I have. So I am just going to, oops, I want to make that line thicker. And because it's like related to Bitcoin, I'll make it orange. And so that's my thesis. So I'm just going to take a screenshot of this to add to my chart as well. And I think, I don't know how I was doing this before, just trying to be like consistent in my formatting or whatever. Yeah, so I don't need all that information on the side. And this, yeah, actually don't think I need much of the data down there. I'm really just looking at the chart up here. So I got that copied and copied to the clipboard. And one thing to note, this alert this alert at $16. I actually bought just a couple shares. I think I bought one share at 16, one share at 15.50. And then, I just trimmed up here. It does look like, we might be forming like a bull flag there. And so I feel like now could be the time to buy, although it's probably breaking out, like I said, gapping up like this. So it could move up, then pull back, retest that purple uptrend, and then move up to $25 a share. So that is my thesis from my own analysis. And so I'm just going to add that to down there so I have that to reference later. But yeah, I mean, like Bitcoin's going up. Let's see, I'll just tell you what the price of Bitcoin is right now. Bitcoin is above 77,000. So I think that's probably going to be good for Marathon Digital and other Bitcoin miners. So yeah, I mean, I think that this could be a winning contract going from, like the average from Friday, which was $1.41. Translates to $141. I think that could be 2xing probably easily. But, I just have like very limited data here. So I thought I'd kind of like, map it out as I go. Yeah, but, I think great person to follow as far as Marathon Digital goes. He does post a lot on them. So I'm just going to make sure that for these prior ones, I've just got the boxes over the date marked because maybe I'm a little OCD. But anyways, cheers to you guys and just, going over data and stuff. Been doing this for an hour and 8 minutes. Hopefully it's helpful and enjoyable. And so this next one, I'm excited about this one. This is the NEO $8 call expiring June 20th of 2025. And so this is like the second kind of, contract that I really started looking at for these. And so what we can see in this, and that makes me feel very similar to, like this AMC one with the upcoming January of 2025 spike in the volume, open interest being held. with this NEO one, spike in the volume open interest being held. Although like with this AMC one, that represents, about less than $200,000. With this NEO one, that represents 250,000. So $250,000, being held up there. So that strikes me as, pretty compelling. And so, yeah, I've been accumulating this one, and my plan for it is to swing for 100%. This is like one of the babies for this little series. And so I want to hold for that 100% swing. And as of right now, you can see these contracts that I bought. I kind of screw up the math with this. You can see there it's 65 and 60 cents, but totaling 125. I didn't want to spend too much time thinking about how to represent that better, but so I've got 1, 2, 3, 4, 5, 6, 7 of these contracts with an average at 70 cents. It looks like the average on Friday was 57 cents, so I am in the red on this one, but I do plan to pick up another contract if it does dip to 50 cents. And the reason why I have it at like 50 cents rather than, 60 or 55, given that those are lower than my average, is because the last time I bought was 55 cents. And so I'll just, if it goes lower, I'll pick up another contract at 50. If it doesn't, I got 7 contracts. And so 7 times 5, $350. That's, a good amount of money. Wait, no, 7 times 70 or $70. That's almost $500. So, I don't want to get too aggressive on this, but I do think that it looks good. And we can see this, total premium. I went over that. IV, spiked up here, but it's kind of calmed down. I'm not the best at interpreting IV. But yeah, this is really, like, a lot of this analysis is my analysis from DGen Ed. A couple of videos there. And so from the graph that I have, it's really just kind of like this smaller, inverse head and shoulders that seemed like it kind of failed. Then we got a breakout. I am a little bit concerned that this is a head and shoulders over here. But what I really see is, left shoulder, head, right shoulder. And so, with this measurement that I have here, I think it could actually be a lot bigger. But, I'll go over the chart to kind of show you guys that. And so this is the one for the contract. Now I'm just pulling over to the share price. And so we could see, this is going up to $8.50. So $8. I got that alert there. That's really just getting back up to that trend line. And so I think $8 strike for this is very reasonable. And, and that's really just kind of based on this stuff here. But if I look at this bigger picture, inverse head and shoulders, what I could draw is going from, here up to, straight up to that neckline. That could be put in price at about $14, almost $14, maybe corresponding, with the high over here around $16. So yeah, I think that this just looks great. Whenever I post that I'm bullish on this, people, kind of get emotional about it, how down they are and all this stuff, and that, I'm an idiot or whatever, and that just makes me more bullish. So yeah, I'm excited about this one. I have a lot of conviction in it, and this, this chart really just makes me feel more confident in that spike in volume and open interest holding up. I think that looks great, especially with it being $250,000. I'm excited about this one. And so, yeah, I will be sad when 100% fills. I feel pretty confident that it will, but also with it being a Chinese company and, all this stuff, maybe there's a little bit of concern there, but I feel pretty good about it. So I'm excited. What can I say? This one, AMC, of course, a lot of these I'm just really excited. So got to keep up the excitement though, because I'm tired. And so with that being said, I'm going to move on to the next one. This is Plug Power. $3 strike call expiring June 20th. Again, I like that June expiration. And so, I do have a position in this. I have, it looks like 1, 2, 3, 4 contracts. My plan is to sell for 100%, but that might also change. I'm not really sure because, basically if things go south a little bit than what I expect, then, it's like, well, then maybe I'll adjust that to 20%. But, the last buy that I had was on the 6th at 35 cents. You can see that this orange line's just been kind of like stair-stepping down. My average for my position is 40 cents. And because I bought at 35 cents, the next level that I would buy is 30 cents. We did hit 29 cents on the 6th when this order was filled. But since then, we have not hit a low. So I'm hoping that tomorrow, it hits a low of 30 cents and my order gets filled, which I have not placed that order yet, but I do plan on it. And just continuing to get this average down, 8 months away. I feel all right about it. And if I do go over here to, let's see, look at this is the contracts. Now looking at the stock. This is one I've done a lot of videos on. I was thinking about this looking like it being, I think kind of like a bear flag and it was breaking down, but then somebody mentioned, I think it was over here that looks like, down move, consolidation. I was saying it looks like a bear flag and could be going lower, and somebody pointed out, oh, well, actually, could be an inverse head and shoulders. I like that. I think right now it's just playing with us like a cat plays with a squirrel or whatever, and it's kind of weird. There's like a lot of social commentary in what I just said. I didn't intend that, but let's say a cat playing with whatever it caught. And so, got this big breakout. I was really excited about that, but then we just retraced. We did retrace to one of the trend lines I talked about in that last video. So that could be acting as support. It does look like it's holding up. Earnings are right here. So, to be honest, this does look pretty weak before earnings coming up on the 12th. So that's Tuesday. But, I am not planning on dumping these contracts at a loss or anything. I'm just going to see what happens around earnings because I got 8 months before these contracts expire. But I think that this could be taken off. We do have this gap here right around $3 at $2.92. And so that's kind of the thesis. And if I do take a measurement of this inverse head and shoulders, so going from, the base of the top of the inverse head there, going straight up to the neckline and then moving this over, to however like this, that could be putting price up to, right around $3 a share. So that does match with that gap. And so I think that there's just a lot of things suggesting to me that price for a plug could be going to $2 a share. So I just like that. Sorry, $3 a share, $3 a share. And that's why I got this $3 strike here. That's why I think this could be 100% swing. And, there's that expiration. So it kind of makes me, not want to diamond hand it. I don't want to be too greedy. And even if I just trim it for 20%, that's good too. But yeah, what we see is, the premium and the underlying stock price kind of match over here. We see these spikes in volume that correspond with premium around 6,000. So, nothing too crazy. This is not a YOLO type of position because nobody's putting $10,000 on it. But yeah, we do see that open interest increasing as time goes on. So I think that's a good thing. People are, accumulating this as price does go down for the underlying stock. So yeah, I feel good about this. I hope I can add more to my position. I hope that I can sell for 100% profit. But if I settle for 20% profit, I'm also happy with that too. No big deal. And I'm just going to make sure that the date's highlighted over there. And so, I just went over plug. And so the next one, I'm really excited about this. And we are going to go back and revisit our friend Volatility because he did just post about this. And also Mr. Chart Norris posted about this. So it's when I should take a step back. Mr. Chart Norris posted about this and I was accumulating shares, not really knowing where a bottom would be. I see his post, suggesting that, Rivian could be forming a bottom based on the weekly. Oops, I got to scroll up. Sorry. My picture is behind it. So I got to scroll over, actually kind of click over here. And so, Mr. Chart Norris saying, Rivian bigger picture on the weekly chart. We see, a hammer candle, inverse hammer candle, or maybe I can't see. I'd have to zoom in on that. And then a star. Oh yeah, so there's a hammer candle right there, and then a star start candle, a doji, I would say. And so it looks like, on the weekly, it could be forming a bottom. And he also has this, posting the inverse head and shoulders pattern. I will also go over, something that Volatility recently posted. We were actually exchanging about this while I was at work. So let's see. He's posted a lot of stuff today. Great guy to follow. I really recommend it. Yeah, so this, I believe I retweeted it with, my own comment on it. And so this is Rivian daily needs to break 1110 and hold above to be out of downtrend. I'll share what I said about it in a second. Volume has been above average for the past 2 days. RSI above moving average and curling. MACD flip bullish. Keep an eye on. And so this is the chart that he posted with that, with this, like downtrend here. And, this could be, like a cup and handle, breakout and, going up to there. And so this, he has it going to 13, I believe. The contract that I was looking at is $15, expiring again June 20th. I just like that date because there's no stress. And so, yeah, I am just going to, let's see. This is too big of a post. Oh, I can do it from over here, yeah. So I've got this to screenshot to add to my little spreadsheet and copy to clipboard, copy over here, and I'll just scroll down here to paste that behind me so you can't really see it. I'm going to adjust that picture to be 5 inches wide so it's not super huge. And then I'm going to copy that link. And the reason why I'm doing this is because I've been considering, wrong window. I have been considering doing something like a Google spreadsheet that would make this, more accessible to people so they can kind of look at this information or look at, the stuff that I'm doing. So I don't know if that's of interest. But yeah, so I got his analysis there. And, then I just kind of wanted to go over my analysis, which is, if you see a lot of people posting the same thing, I think that is, and doing it independently or complementary, however you want to think about it. I think that's how it's like, okay, maybe there's something there. So this is the premium for that contract. This is the analysis that I've been doing. And so, I was just, basically when it went up here, and so initially, I had drawn this as like, an inverse head and shoulders pattern here, basically like a couple days or the day before this broke out, gapped up. I put out a video about that. So I was pretty stoked about it, but I didn't have any shares. I didn't have any contracts. As it went up here, I was like, well, I like the company. I like the stock. I'm going to start adding. And so just very slowly been accumulating a very small position. I think my average is around like 12. Maybe it's below 12 now. I started to get, more aggressive. I think it's closer to 11 now because I think maybe somebody during a live stream also, with Mr. Chart Norris posting about this and now Volatility, it's like, well, I think that this is like potentially, forming a bottom. Maybe this could be a bear flag. So I'm a little concerned about it. But, with earnings here on the 7th, maybe we kind of see how it responded to that. And so I was expecting it to either, tank or take off. And we didn't really see that. And what we saw is what makes me think that, like, it's put in a bottom because it wasn't volatile to the upside, which might mean that, it's just going to continue to skyrocket, or that it's going to be unsustainable and crash down, or that it's just going to collapse. It didn't do either of those things. So I think it's just like saying, hey, we're putting in a healthy floor here with the low at 950, closing on the 6th before earnings at 971, and now being at this purple downtrend. I think that this is just looking really good. We also have this red uptrend that we fake out broke below, which goes back to this, is that 52-week low of 826. And, just all of these levels there, it's just like a confluence of levels. I feel like that's good. And going up to 15, why would I pick 15? Probably just because round number, I don't know, because 13, how many people are picking contracts with a $13 strike? There's probably going to be more volume on the $15 strikes, people thinking fives, So that's why I was thinking about that one. But, $13. Yeah, what did Volatility say in his post? He said, oh, well, he said 11.10. Needs to break 11.10, but here he's got this shaded area right around $13. So that matches up with my analysis over here, right around 13 bucks. So lots of thoughts, lots of ideas coming together, and I probably just want to, let's see, take a screenshot of all of this crap that I have up here to add to my little chart of stuff so we can see that. So copying, oh dang it, note, copying that to the clipboard, and I am just going to add that to my little list of, good ideas here, lots of support here. And so anyways, getting into the details of this contract and stuff, what we can see is the premium's been coming down just like the stock price. I've been building a small position because it's like, $100 a contract. I don't have a big position. I just have two. My average is $1.15. I plan on swinging this for a 100% swing. And the reason why 100%, not just 20%, is because I've got conviction in this. I just feel like this is a solid play. And and I'll be sad when that fills because I'm sure it's going to go maybe to 200%. But I don't want to just be dreaming about big numbers. I want to be capitalizing on them. And so what we can see in this chart here, we got the volume, we got a big spike more recently. And so it will be interesting to see what the open interest is like on Monday, because that should correspond with a spike. And then it would also be nice to see if that is holding up. What we see in the premium spike on Friday up to around $200,000. So I think that's looking really good, especially with earnings behind us. I think this like earnings was a declaration that the bottom is in a very, very casual way. I think that's a good sign. It's not dramatic. It's not getting retail to be like, whoa. It's getting retail to be like keeping an eye on, not jumping on board. And so I feel like just from a psychological standpoint, that is, I think that says a lot. Just keeping an eye on. Retail are not on board or not heavily involved. They are just watching it, and that's, how you miss out. So I'm just really excited about this. And so my plan with it, like I said, swing for 100%. And looking at the price over here, the low on Friday was 91 cents, but I plan on getting another contract at 90 cents. The reason why I'm not getting another one at 95 or 91 is just because if it doesn't go to 90, I'm fine. I'm risking, $230 on this right now. That's fine. I don't need to put hundreds and hundreds or thousands of dollars on this because I am really just learning how to manage, these long dated contracts. But yeah, I feel really excited about this one. And so, yeah, it's going to be exciting. And yeah, that's pretty much all I have for that. So, I'm just going to do another cheers as usual. Getting pretty close to the bottom, but I think I just got 4 more tickers to go over. And so the next one, this one, is SSYS. I'm not really, I don't care about this stock. I don't care about this company. I don't know anything about them. But Gareth Solway did post about it in one of his videos. He did feature it. And it was really just based on, oop, crap, I am blocking some of the view. It's really just based on this long-term downtrend, and that it's just broken out and then been consolidating above that downtrend. But then it's it's a downtrend, so it could be consolidating above it for a while and just moving down as these contracts bleed. So, I got out of my position. I took less than a 10% profit, which was $9.65. And so, what I did with this was I had bought 3 contracts, one at 75 cents, another at 50, and then another at 40. So I got 3 there. got my average to right around 60 cents, and then I sold, actually, no, not right around 60 cents. Yeah, right around a little bit below 60 cents at 57 cents. And then I sold at 180, 3 contracts with this. So this is actually pretty cool. You can see my order. I took a screenshot of it. I should actually probably move this up and so it doesn't get lost down there. But yeah, maybe I want to actually shrink the size of this. Let's see. So we can see it better in this limited view. But yeah, so this is, like data from unusual whales. And what we can see on November 5th, we see these 3 little orders there. I should have had my little cursor hover over it because then you'd see the data. But for the day, 3 contracts traded. Those were all mine. And average 60 cents. And you can see that information there. So that was all me. That was all me. It says, 100% on the ask side, but I sold. Somebody bought, I guess, the opposite side of me. And yeah, and let's see. Do I regret selling? I think that's a good question. The high was on the 5th, of course, because I was the only one that traded at 60 cents. Then on the 6th, 62. Then on the 7th, 64. So yeah, sure, I could have made more money. That sucks. I missed out. But as you can see up here, this data is kind of spotty. There's lots of NAs. So I just don't like how limited data this is. This is a $10 strike expiring June 20th. I like that date. Yeah, I mean, this is just like the premium traded on this, $600. It's nothing. So I wanted to get out of this because I didn't just want to be holding it forever and just continuing to add to it over and over and over. And so I'm glad that I got out of it. But we can look over at the chart to see, why did I pick the $10 strike for June 20th? And maybe this is something, that's interesting to get back into. It's still around, 64 cents. Nothing too crazy. And so if I do pull up the chart here, it's just, yeah, I mean, $10. The reason for that $10 level is because that's like the pivot lows over here. Got like a double bottom before going up. So I could see price moving back up to there, bumping into some resistance, maybe breaking through it. Who knows? Earnings coming up on the 13th. And so, yeah, I mean, with this being like above a downtrend, I don't want it to like retest that downtrend after earnings. If it does, maybe it's something I want to reevaluate and get back into. But just the limited data that we see over here, it's a little spotty. I don't really like it. So I'm glad, I made just about $10. So this would have been $10, but it's $10, minus fees, whatever. So $9.65. I keep track of all that stuff. But yeah, so maybe with earnings being here on the 13th, maybe, I see that, now it's at like 40 cents. Maybe I want to reestablish if it's, retesting this downtrend at like 650 with the potential to go up to 10 before June. I think that seems like a much better trade than just diamond handing this. So I'm glad I took the profits. Even though I could have made a little bit more money, I think it was a good move. Because, there are some moves that I could make are not so good, which might be, actually not the next one. I've got 4 more now to go over. The next one I'm really excited about. It's one I was thinking about buying some shares on. And I'm just really, really excited about it because, it's like I said I was going to wait for a level. And I waited for it. It's not there yet, but I think it will. But anyways, cheers to you guys. And to learning. Hopefully you guys are learning with me. But anyways, the next one is Tilray. So I'm really, really excited about this because I had covered, like a series on Tilray Unusual Whales data before their earnings. I was long, it went down. I lost a little bit of money, but, not a big deal. And so basically with this, the reason why I'm excited about it is, I guess I should just flip over to the chart. This is something that I talked about. I made this wedge pattern. It's funny, like on, I think like October 21st, I made a video going over this wedge pattern that, I'm waiting for price down to come down to $1.42 because I think that would correspond with retesting the base of this wedge On earnings day, it did wick down to $1.45. So maybe that's a sign that it's going to wick down to or go down to around $1.45, maybe $1.42, or as you can see over here, $1.420, just having fun with it, being a cannabis stock. I think that's fun. So, I have this alert here at $1.42, but then I started thinking, rather than like buying 100 shares at $1.42 or, however many shares I want to buy down there, maybe I just get a contract and then I could swing that for, let's see, 100% or more. And, I think that could be nice. And so we closed on Friday at $1.49, hit a low of $1.48. So getting really close to $1.42. So like rather than waiting for that level to be hit exactly, maybe I want to, get in on this. And that's based on, as you can tell here, this, falling wedge. And with that, I think that it's all about testing your limits. It's all about the psychology and pushing people to do the exact opposite of what they should be doing. And so with this wedge, following its formation, with these two pivot points up here, really just thinking about the top, is that we see price trading within it, wicking to the very top of it, but then pulling back. Then it wicks above, then it pulls back, then it breaks out, then it pulls back. And so I think that the next time that it breaks out, we get a pretty nice move. But because of this, in my view, kind of like foreshadowing of the future, $1.45 that was hit on October 10th, we could be coming back down to around $1.42. So, I want to start getting into this. But rather than with shares, I'm going to do it with calls. And so with that being said, from this wedge, I could see it moving up to $1.99 or $2 a share, right around there, because there's this gap up here. So I think that seems pretty reasonable. Also with the high of the wedge here at 215 seems very reasonable. So I'm excited about this one. And so I want to get in on it. And so what is my plan to get in on? Oops, I got to take a screenshot of that to add it to that. Yeah, so that's, and also we see like the MACD here just flipped red. It could keep going red, so this could be coming down a little bit lower. So yeah, I mean, that's my thesis, and I'm sticking to it. And so hopefully this is, yeah. And then also like the RSI there, that's 37, 34, so just above 30. It could go a little bit lower. And so that's, like what I'm looking forward to with this. Just really like making sure, did I copy that correctly? Oops, I want to do it there. Yep, so that looks good. And so that's kind of, like my thesis for this one. I don't have that much data because I like just realized this. I do have the $2 strike, June 20th, of course, my favorite date. And so the low on Friday was 21 cents. But, my thesis is that it could be coming lower, so I would establish a position at 20 cents. And that would just be one contract, so risking $20, nothing too crazy. But if price is going lower, I could then add without breaking a sweat and, then waiting for this to break out of that wedge. So, I feel really good about this one. I'm really excited about it. And yeah, I think I began to mention this. I put out a video on this on October 21st, and like the next day it broke out, and I was making the case that I think it's going down to $1.42. Broke out, but it's just like playing with those emotions. Breakout, and here, it breaks out here. It takes us a while to get a close above that high, and actually, so what was the high on the 22nd? The high was $1.73. What was the close here on the 28th? The close was $1.73, so at but not above that level. I guess we got to close above it here. $1.77, but it was just playing with us up here. And so I wasn't in it. I plan on getting it back into it because I was in it before earnings over here. I plan on getting back into it, $1.42 to swing some calls, just to have some fun. Not to go long for the long term, just long for the fun term, the short term, whatever that is. Yeah, but I mean, this is like a pretty simple thesis. We do have a spike in the total premium going above 10,000, so that is somebody maybe YOLOing on that, but I really just don't have enough data here because I just got it from the past 5 days. So I think, this is really just based on my TA and just, being an idiot thinking that $1.420 is a fun price. And so I think it's going there because yeah, it's like, what does Elon say about Doge? Fate loves irony or whatever, it's funny. So $1.420. I think it's going to happen. I'm really excited about it. So yeah, I wanted to include that here. I don't have a position in it, don't have a buy order place, but I will have that place before open on Monday. And so, yeah, with that being said, cheers. I got to think of a new phrase other than with that being said. I say that too much. But with that not being said, let's move on to Unity software. So I got two contracts here. This is one that I had. And I had this, I'd actually swung this. If you notice down here, I actually made some money. I think 20%, maybe, I'm not exactly sure. My average here was 21 cents. And I swung it for 21. I guess did I break even? I don't know. No, I think I probably screwed up the math or something. I'm not sure. I think it was 19 cents. I think I made like 10% on it. I can't remember. That was like before I was doing all this with the table, I think. But yeah, I mean, I've just been like accumulating as it was going down. And so I exited my position. I lost 60 cents. So that translates to 60 cents because that's just the dollar amount. I lost less than, or I made less than 0%, but pretty negligible, 60 cents. Who cares? But yeah, the thesis that I had for this one is, aside from, the Bronx Viking, others posting about it, I had just done my own analysis months before then. I noticed during a live stream, I believe somebody requested it. I noticed this downtrending channel. It's, it's not perfect. And I just thought that, price might be bouncing, and I wasn't sure exactly where it would be bouncing. I was pretty close to, I think, timing like a pullback right around here where the cursor is, but I missed it by, I think, like 7 cents, something like that. But, whatever, it happens. And it's like, well, if I don't have shares, maybe I could do some calls. And I could see, this purple line here, that's around 45 cents. Or $45. I could see price going up to $45. But by January 17th, that's a little too soon. So I was just thinking like, man, I kind of want to get out of this because I think that it's going to end up going to zero eventually. And so I was just adding to get my average down. And we can see, I bought here at 8 cents. Here on this day, on the 29th of October, I bought one at 10 cents, one at 9 cents. Here, I bought one at 9 cents, one at 8 cents. But this most recent one, 8 cents. And we could see like the highs were, following those buys, not at my average of 11 cents until, I exited at 11 cents. I had 9 contracts, 99 cents, $99, risked less than $100 on it. But, I could have sold at more of a profit, at 12 cents or at 13 cents, but maybe that wouldn't have gotten filled. So I think it was good that I was not greedy. I think it was good that I recognized that $45 is a little too ambitious for a January expiration, at least for my comfort, for my psychology, my emotions. Got to manage it relative to that. Whoever you are, you got to manage your emotions. And so for me, this was not worth it. And I feel really good about what I did, even though I lost 60 cents. What happened on Friday? The high was 9 cents, which is lower than my average was. And, the low was 3 cents. The average was 5 cents. And so I kind of dodged a bullet with that in that sense, but I maybe didn't dodge a different bullet, which I'll go over on the next tab. But yeah, I just wanted to go over, I was adding up here, trimming out of my position, I think, until I got to, I trimmed out here when I was at 11 cents, and then it just, dropped because I, exited my position. And we can see here that, the open interest shot up, pulled back a little bit, but it maintained up here. And so that's kind of like, the premium up here was, so it's about, $250,000 being maintained up there, but still, that money could go to zero. So yeah, I exited that. And what we can see if we look over at the chart, I do have a different contract, which I'll pull up in a minute. But yeah, I mean, it's just like consolidating around the midpoint of that channel. So that to me, like if I remove my drawings, upside move, consolidation, that to me looks like a bull flag. But earnings were on the 7th and it pulled back 7.7%, hitting a low of $20.10, closing at $20.50. But it's still, I mean, it's respecting this flag pattern. And, it's at the middle of that channel, which is, of course, approximate that I have drawn there. But, the thesis is still there that this could be going up to like $30 here, which is the golden pocket from this retracement, or right around $45 here with this purple line. I just don't know that it'd get there by January, so that's why I wanted to exit. But this golden pocket right around 30, I could see price getting to there. By January, I don't know, but maybe by February. I would have looked for a contract that was dated a little bit later than February, but there just wasn't that much information on it. So I did pick up a call, a $30 strike call expiring February 21st of 2025. I picked this up, basically on the 6th, so the day that I sold this contract, or these contracts, because I had 9 of them, I then decided, well, hey, I still think that this is going to go up. I just don't think it's going to go to 45. So I maybe, 30 and February. That seems more reasonable. So I moved some money from the other one, basically all of the money, not all of the money, but 80% of the money into this, placing a buy at 80 cents. But we can see, the low, oh man, on Friday was 37 cents. So I shouldn't have done this. I should have taken my, let's see, $80 going up to, I should have taken my $20, on Thursday, which was that was earnings, right? Yeah, because I was up. Take it. Yeah, I didn't do that. I got greedy. And yeah, so that's $80 to, that's 20%, 20% is $16. I would have been up $20, 22 based on the high there. So it's like, I mean, I should have exited, but I didn't. Whatever. My plan is to buy at 2 levels, one being the low from Friday, which was 37 cents. If that's retested, I want to pick up another contract. If it's not, the close for that contract, if I do come over here, was, so yeah, you can, I don't know if you can see it, the $30 strike, February 21st, 2025 call contract, that closed at 44 cents. So, I'd like to pick up a contract at 44 cents. So hopefully I can get this, 80 down to, whatever the average would be of buying those two and maybe some more. But yeah, this would be to swing for apparently 100%. But I don't know, February, I'm a little bit antsy about that. So I feel like I'd probably end up settling for 20% because I feel like this was like, a lesson. Don't be greedy. I was greedy. But maybe there's like a reverse lesson in that where it's like, don't be greedy. I was greedy. And you're like, okay, but now the next time you should be greedy. I don't know. But yeah, I just don't have that much data on this. It does look like the volume spiked up because of earnings, and premium spiked up, but only to like not even 45,000. Looks like not even 44,000. So that's like, for degens, YOLOing, nothing too crazy. And this is kind of like, gotten into the meme stock territory, retail, heavy interest. So yeah, but I mean, I've done a number of videos on it, and I've just been really proud of my analysis. And I think that I will be able to make money on this contract. But I wish I was buying on Friday. I just didn't have anything on the side to be buying. Had to be waiting for payday. But yeah, so I intend to be buying at both of those levels if they get filled. If not, happy to just risk $80 and chill. And so, I've got, I think, maybe 2 sips left. I've got one more ticker to go over. And so I'll finish that at the very end. The next one, I don't plan on trading this, but I just kind of wanted to look at it for the data just out of like curiosity. But like once I started keeping track of this, it kind of backfired on me. yeah, and so this is UVIX, which is the 2x leverage, like volatility index futures. And yeah, this is what I like to trade as far as picking up shares of volatility. I thought, well, maybe I'll look at options. And so the thesis is that it could be going up towards $8 a share before December 20th. And so, I do have a video here I recently did on it, but I'll just pull up the chart so we can kind of like go over that thesis. And that is effectively like $8. Why did I pick 8? I don't really know. Probably because there's a pivot high over here around 8, 726. Yeah, but I just see that, there's this really nice, let's see, just adjust that axis. There's this really nice downtrend that I noticed going back to the high, from July 25th, the other pivot point being the high from September 6th. I go over that in the video that I just put out. And this high from October 7th, hit that level, closed right at it, and then got rejected. And so I was kind of thinking like that seems like a pretty significant level. I put out the video, let's see, 5 days ago. So when it was up here, that would be the first. Yeah, that was the Friday. And, I was kind of, is this breaking out or is this faking out? And I thought there'd be a lot of volatility around the election, might be some unrest, might be some uncertainty, and that volatility could be spiking. But then, I started to notice that there's this, kind of pattern. So if I just, from the top here to the other top here, that represents about 32 days or about a month. And then if I go over from there to here, from this peak to that peak, it's not 32 days, but it's 31 days. That's about that's about 1 month from the top to the bottom in the middle, and then the top over here. Move that over again. And, I guess shorten it a little bit. So I was like wondering, is this going to keep running and stuff? Or is this going to pull back? It ended up pulling back, but still, between, those bars, let's see, I need to just move this down so we can kind of view it all in the same picture. It's 24 days, so almost 2 months. And so it's like, this spike over here was August 5th. I feel like that's a date a lot of people will remember. Then over here, this is going to be September 6th. Over here, this is October 7th. Over here, this is October 31st, so a little early. And so, I'm just thinking that like basically by the end of next week, this could be like a really good time to, buy. And, I do have some shares of this. I am accumulating it. And I do think that this will be going up, basically from the high over here to, I deleted that box that I had just drawn. But yeah, so from here, about 30 days, let's see, 29 days, about a month. Dip buy, this would correspond with right around November 15th, right here. And that could be, the low before, there's a high. So I think that there's just a lot of opportunity with this, whether it's just trading the shares or potentially with an option. I don't plan on buying any of these calls. I just wanted to kind of look at it as another data source. Oh, and I should, I guess, let's see. I'm going to hide my drawings. And I'm going to, how am I going to do this? Nope. Actually, no, I'm just going to leave my drawings and I'll just do it zoomed in like this. Dang it. Oh, man, what am I doing? No, this is basically, what I'm thinking. About 30, yeah, whatever it is. But this is basically my DD that I think, this is the drawing tool that, this has. Maybe I want to exit that just so I can do this a little bit cleaner. And so, yeah, if I do the drawing tool, this is like, going from up here That's 1 cycle, 2 cycles, 3 cycles, and then 4 cycles. So that's kind of my thesis on that. And yeah, I'll make that. I guess I'll just leave it white. But yeah, that's basically my DD for the chart, my TA. So I'll just take a screenshot of that to add to my little spreadsheet. And save that to the clipboard. Paste this over here. That is my analysis. And yeah, I mean, this says, you know, the premium just dropped, you know, because we saw this big, you know, gap down. That's fallen the 5th. You know, this really starts to pull back as, you know, the stock market's hitting new all-time highs, all this stuff. But it just seems like it's settling here. And we got like, you know, a spinning top right here. So I feel like the bottom could be in. So, yeah, I mean, I just plan on accumulating over the course of the next 2 weeks probably. And then I'll trim maybe for 10%, 20%, whatever of the shares. Not doing anything with the contracts. But yeah, I mean, what we can see here is the premium dropped from, this was 90 cents down to 30 cents, 20, whatever. Super cheap now. And, you know, this could be then going back up from 30 cents to 60 cents. That's 2x. So actually, maybe I would want to pick up one of these. Maybe I want to pick up one. And this would just be like placing a limit buy at this. And if it gets filled, cool. If it doesn't, that's cool too. Yeah, I'm not worried about it. But that's, yeah, basically my analysis of this. The open interest has gone up. It's only like 300 contracts. The premium is around 12,000, so that's like 1 YOLO. But yeah, I mean, those are, you know, all the stocks that I want to go over. I'm just going to move these, you know, back over to where the date is, just so everything's lined up. And then I'm going to go back over here to this. So yeah, I mean, went over all this, and yeah, I took profits on this one, as I had discussed. I'm going to get Ed out of the way for a second. You know, took small profit on this. SSYS took a 40% profit on FSLY, so happy about that. Might buy back in. And then took a small loss on Unity Software here, but then I, you know, rolled that into this other one that I'm losing on in a different way, but I've got an extra month on that one. So, yeah, I mean, that's kind of it for this. I'm just going to bring Ed back to cheers him, to cheers you guys. Thanks for hanging out. This is just about a 2-hour long video. And with that being said, if you did find this helpful, if you do enjoy this, I'm going to try to do this every Saturday. Please make sure you like, let me know in the comments down below what your thoughts are, what stocks you're interested in for me to go over potentially for, you know, videos like this. And make sure you subscribe to the channel because I am really just trying to document my learning of the stock market, how to have an edge, how to make money. And so hopefully my documentation is helpful for you guys. Talking about it like this is helpful for me. Putting stuff in the spreadsheet, it just, you know, it's something a little bit more tangible than just reading something. I'm actually like interacting with the data and trying to interpret it better. And so hopefully talking about it like this is helpful for you guys. Thank you so much for being here. Please do tune in tomorrow night for Ticker Quest Live. It is a lot of fun. Go over a lot of different stocks and just hang out, chat. It's fun. And I'm not working on Monday, so I can do that kind of late. But that is Ticker Quest Live, Sundays at 9 p.m. Eastern. Thank you so much for joining. And yeah, thanks for watching, I should say. Having a great rest of your day, rest of your weekend, and, you know, start to the week. I'm really excited about it. I hope you guys are too. Take care.